Income taxes are always a subject for heated discussion during presidential campaigns, and as we mentioned earlier, they are expected to be fair game during tonight's Democratic candidate debate. But one income tax strategy that has not been mentioned so far during this campaign is the so-called flat income tax, where every income level pays the same rate. Steve Forbes, who ran for president twice, referred to it as the fairest income tax. Is it? We have two opposing views on that tonight. Joining us, Leon LaBrecque, who's the Chief Growth Officer at Sequoia Financial Group. He says it is fair. Peter Mallouk is CIO at Creative Planning. He says it is not. Thank you both for joining us tonight.
You bet.
Leon,
good to be here.
Leon, make the case for the flat tax.
Flat tax is fair. Everybody pays the same. If I make 1,000 times more, I pay 1,000 times more tax. It's simple. I don't need the IRS. I don't need a lot of bureaucracy. 93% of us could file our tax returns and not even have to do a tax return. And it cuts out all the bureaucracy. And it cuts out the loopholes. Guys who make a lot of money can get out of paying the tax. We can make it a lot simpler for everybody. We did it on the corporate side. We do it with Social Security. It's a flat rate tax. It works.
All right, Peter, you do not think that the math adds up in a flat tax, and you also have some other issues in terms of income inequality. Tell us about it.
Well, I think that the argument about simplification is a Trojan horse. So if you think about a flat tax, right now the top rate's 37% federal income tax. The bottom rate, people are paying around 10%. So if we're going to have a flat tax, let's assume it's not the highest rate. It's not 37%. We're not going to raise it on the huge majority of Americans. So let's say it's 20%. Well, that means that the wealthiest people saw their tax rate come down a lot. Where are we going to make that up? The only way you can make it up is by taxing poor people and the middle class more. And that does not sound like the most wonderful idea in the world that we live in today. So this is totally different than the debate about should income tax rates be a couple percent higher or lower, or capital gains rates be a little higher or lower. This is talking about a very radical shift of more wealth to the very, very, very top Americans.
What do you say, Leon?
Well, I say that Warren Buffett pays less income taxes than his receptionist, and that's a good example of the very, very wealthy, and I think Peter might agree with me, the very, very wealthy can reduce their taxes through a lot of different strategies. The middle class is who's getting hit the most, and I would also suggest to Peter that if we gave a deduction, like we said, anything under $54,000, there's zero tax, and then have a 17 or a 22% tax above that might accommodate the thing. The numbers could work, and I just think the simplification and the fairness of it makes a lot of sense.
I'm curious, Leon, what you think a fair rate would be. If you're looking for a single flat rate, what would it be, do you think?
It's probably around 20%. Peter's probably right. 17's been bandied around, and that won't get rid of our deficits, and it won't solve our problems. And people have to recognize that we need to run our government, run our society with taxes.
Peter, what about the issue that a number of people have raised, that a flat tax would simplify things, putting aside your point about income inequality, but it would simplify the whole system?
So, I mean, the idea of the flat tax, the simplification argument, to me, doesn't tie with reality. So what is true is it's simple in the fact that there's no more deductions, there are no more exclusions and exemptions, there's no more homeowners deduction, there's no more 401k deduction, there's no more charitable deductions. So does that simplify the tax return? Of course it does. So you could get rid of your 100-page tax return and make it be one page with a flat tax. But you can do the exact same thing with a progressive tax that no longer has deductions and exclusions. These are one issue being used to cloud another one. So the idea that a flat tax is simple isn't correct. Getting rid of all the deductions and exemptions is what makes it simple. Can the first page of your return say, if you make $1 million, you pay 35%, and if you make $10,000, you pay 10%? Yes, that's not a lot of complexity. Separate, the issue we were talking about earlier, it's true, Warren Buffett doesn't pay a lot of income taxes. And I saw earlier on your segment, you have somebody, I can't remember who it was, proposing a higher capital gains rate.
Right.
Separate from the income tax issue, wealthy people are the ones that own things that are taxed at a capital gains rate. They own stocks and they own real estate. So that's the reason Warren Buffett, Jeff Bezos are not paying a lot of income taxes. Yes, it doesn't solve the problem for them, but that has nothing to do with why or why not we should have a flat tax. That's an argument of should the capital gains rate and the income tax rate be closer together, which is what Warren Buffett's proposed.
Very good. We wish we had more time. We could go on, I know, but we must stop at this point. Leon LaBrecque from Sequoia Financial Group, Peter Mallouk from Creative Planning. Thank you both for joining us tonight.
Thanks, guys.